Forex traders, happy new week. This is the first commentary for this week, 17th of March 2025, and today I'm going to be analyzing about 3 currency assets that you should be looking at this week, and I really do hope that you're able to catch a profitable trade this week. First thing we do every time you come to the chart is to first of all take a look at the economic calendar of events on forexfactory.com. You're trying to know what's happening on the fundamental basics, so you're looking at the economic calendar of events on forexfactory.com, and you are paying attention to the news events, the type of impact, whether high, medium or low impact, and then the day and the time that event is going to be happening and the asset is going to be affecting. Okay, so this week we're going to look at today is Monday 17. Literally you can see we only have about high impacts on the dollar around 1:30 p.m. GMT +1. You just scroll through and take note of all the high and medium impact news events. We have another one tomorrow, a medium impact on the euro, so you should be expecting some level of volatility on the euro, and also Canadian pairs. We have CPI by 1:30 p.m. So just go through and take note of these events, the date, the time, the type of impact, and the assets that it's going to be affecting. The high impact simply means that price action is going to be volatile from the time that event is going to be, releasing. It's going to be happening from the time the event is going to be happening. And medium impact simply means there's still going to be volatility, but maybe not just as volatile as it will be when it's high impact. Low impact means a day when you have completely no medium or no high impact on the economic calendar is a day with very little volatility. It's going to be a slow day. If you see the absence of a medium or high impact in any of the trading days, it tells you that it's going to be a very slow trading day. Then let's go to the dollar index, because the dollar index is the benchmark asset for all the dollar and dollar associated currency. So those of you who are going to be trading the Euro USD, GBPUSD, NZUSD, AUDUSD, all these currency pairs, you need to know the direction on the dollar, because the dollar is the main driver. So this is the daily time frame for the dollar index. Remember that the monthly has been bearish, weekly has been bearish as well. We've seen the dollar selling off bearish order block after taking out the high of the consolidation right here. The dollar has been selling. Current order flow on the dollar is bearish, and we're looking at the dollar liquidity residing at the inefficiency here. All of this inefficiency, the gap that price just tapped into, we have a bullish order block there. We have an old low, fair value gap. All these are potential drawn liquidity on the dollar index. So we're bearish on the dollar at the moment. On the weekly time frame, we just traded below sell side liquidity pool on the internal range right here. That old low, sell side liquidity pool residing below that old low. We just tap into that level. A fair repricing into the internal range above will be a very good point for us to still sell the dollar into the discount area. However, we're looking at the daily time frame, and on the daily time frame, we're supposed to be focusing on market structure, price action, creating clear structure in the direction of order flow. If we're bearish, we need to see the dollar constantly create lower low, lower highs, and if we're bullish, we need to see the dollar create higher high and higher lows. However, since we're bullish this week, we need to see price action to continue from lower low, lower high. So we just formed another lower low, taking out external range liquidity below the relative equal lows right here. We need to see the dollar reprice into internal range, at least mitigate all of this inefficiency before we sell them all. However, I'm looking at something very powerful by the left. This is also a support and resistance concept. Price action violated that fair value gap right there by the left. See how we violated it and we traded into it, and price action is looking to find resistance. It's seeming like they're going to find resistance at this area to push more into the discount area, specifically the breaker right there, because price took out the low before the shift of structure bullish. You may see the dollar head for that area right there. So on the 1 hour time frame, let's take a look at what the dollar is doing on the 1 hour. On the 1 hour, I clearly see the dollar has just taken a liquidity above all of those highs right there. You can see that we traded above that high, took a liquidity above the high, and created a shift of market structure bearish. Take a look at the dollar creating shift of structure bearish right there, And I would like to see the dollar, take out that Friday intraday high and trade into that bearish breaker right there and sell off into the discount area, just like we outlined also on the daily time frame. If you take a look at the 15 minutes time frame, it's going to be a little bit clear to you. In the 15 minutes, you clearly see that the dollar actually took out that old high and created shift of structure below all of that. So we have a shift of market structure bearish, and we would like to see the dollar run liquidity, do a run on liquidity above that buy side liquidity pool residing right there and trade into that internal range bearish breakout, bearish order block, all of those confluences. I would prefer to see the dollar trade into that level, then I'll look to short the dollar into the drawn liquidity, residing below the relative equal lows right here. You see that relative equal lows, that's drawn liquidity, and that old low right there, that's drawn liquidity. So I'll be looking to short the dollar from this into this area, still using confirmatory signature on the lower time frames like the 5 minutes time frame, a clear shift in market structure bearish, and we confirm to sell the dollar around this level. And until we're here, we shouldn't be buying Euro USD, GBP USD, NZ USD, AUD. We shouldn't be executing on those pairs until the dollar is right here and it's ready to start moving to the downside. That is all about the dollar for today. So let's take a look at the next asset, GBPJPY. Then we'll take a look at gold, and I think I've done justice to trading this week. So GBPJPY as well created something very powerful on the higher time frame. We're bullish. Clearly you can see a bullish price action, created shifted market structure bullish, traded into that bullish order block, took out liquidity below that old low, tapped into the bullish order block, and is heading to the upside, heading to the next drawn liquidity. On the daily time frame, you can see clearly also that the GBPJPY is bullish. Why is it bullish? You see price action created the bullish proportion candle. What do I mean? You see the GBPJPY traded into that bullish order block right here, then created another bullish order block. Last week I talked about the bullish and bearish propulsion candles and how you can use them to frame very good setups. And just this week, we see the GBPJPY using the propulsion candle as a powerful signature for taking a trade on the GBPJPY. If you're looking to learn in-depth knowledge about my trading and how I trade, I think I would recommend you guys to just check the link on the description of this video and sign up for my one-on-one mentorship program. One-on-one mentorship is a little bit, pricey, but of course, it's going to give you dedicated attention. It's going to give you an accountability partner, and you're going to have access to my profound trading models for being able to, study the market and tell exactly where the market is going to be moving on your own without needing anybody to give you signals or direction, even though you're still going to be able to have access to all of that as an extra bonus. And you're going to have access to my catalog of Zoom sessions that I've had with one-on-one mentorship students, and every time we're having a new session, you also be able to join. That way you're constantly learning. That's by the way. Let's focus on the GBPJP. Take a look at the GBPJPY. You see price traded reacted of the bullish propulsion. So if you take a look at the GBPJPY, price reacted of the bullish order block on the daily, again created another bullish order block, and this week Monday we opened and traded into that propulsion candle. Remember, I taught this. I said when using the propulsion candle, most times we shouldn't see price action trade below 50% of the order block candle. If truly we're going to be in the direction, we shouldn't trade below 50% of the order block, the second order block. Okay, where's the drawn liquidity? Do you see the relative equal highs right there? These relative equal highs are drawn liquidity. That equal high right there, the fair value gap right above it, all that is the drawn liquidity. See that another fair value gap right above that equal high right here, that is draw on liquidity. On the 1 hour, we're going to see how we can frame a trade setup. And on the 1 hour, what do we see? We see price action. Look at what price did on the 1 hour. With a shift in market structure bullish, traded back into that discount bullish order block. Then what do we see this week? Price traded into the propulsion candle, the bullish propulsion candle, in confluence with the 1 hour fair value, in confluence with the reclaimed order block on the 1 hour. You see that bullish order block that's violated here, and we traded above it. Price traded back into that bullish claimed order block, confluence with the fair value gap, and price created an entry signature, that swing low, 3 candle price action. Immediately price violates the high of the third candle. See that third candle high? That would have been first entry. Just that didn't happen during the session. We're supposed to be looking for trade entry. So price traded back into that bullish order block, and that is our entry for the buy on GBPJP. And we're buying into the next one liquidity. Hold high there, the relative highs, and ultimately at high. So we're bullish on GBPJP. On gold, let's take a look at gold. Gold has been bullish for quite some time, and this was the trade setup we called last week during the in-house analysis. We got this trade setup and gold has delivered. So if you take a look at the weekly time frame, gold is bullish. Daily time frame, gold is bullish. See that? Just that we like to see gold tap into this buy side imbalance, sell-side inefficiency. You see all of this wide range gap. We just want to see it tap into it and create a 1 hour time frame signature for us to be buying the gold into the next round of liquidity. So we like to see gold take out the sell-side liquidity residing below that old low and trade into 50% of this large range fair value gap. Consequent encroachment, trade into that area and create shift of structure or confirmatory signature for us to buy gold into the next strong liquidity. Okay, if gold takes out this high first, then I would like to sell gold into the internal range before we buy again. This is what I'm looking at gold, GBPJP, and the dollar index. I really hope that you learned something in today's session. Don't forget to give me a subscribe on this video. Make sure you subscribe and turn on your notification bell so you stay updated every time I post a video. And don't forget to join my free Telegram community for trading content, educational content, free signals. Right on the description of the video, you're going to see the link to join my free Telegram community. My friends, until next time, I wish you good luck with trading. Stay safe.